Let's stop all of this ideological nonsense. Let's take away the Bitcoin maxi hat and let's have a look at what really long-term, over the next decades potentially, could move Bitcoin's price. Let's see at the quantifiable data. I think there are three reasons why the Bitcoin price might increase over the long term. The first one is obviously monetary expansion, as in the monetary base tends to grow faster than the Bitcoin supply. The second reason is adoption, right? More and more people save, at least partially, in Bitcoin. The third reason is that some of the Bitcoin even gets lost over time, so the supply might actually even be shrinking. In this video, we are going to look at the data of all of those three effects to find out how healthy are those trends actually. Let's start off with the Bitcoin that tends to get lost. This is the Bitcoin hodl waves, and it looks at the percent of Bitcoin that hasn't moved for at least 5 years. This is a graph that tends to just go up. There are very few wicks in this graph over the long term. More and more Bitcoin gets lost, or at least it's invested for the very long term and is unlikely going to hit the market soon. This graph grew by roughly 10 percentage points over the span of 6 years. And so it's roughly 1.6% of Bitcoin's supply every year that will not hit the market anytime soon because it gets lost or because it simply just is in very much the diamond holder's hands. This effect is, by the way, more than double in magnitude compared to Bitcoin mining, right? The Bitcoin mining issuance is only 0.85% per annum. Now, the reason why Bitcoin was born is monetary expansion. This is USM2. Now, this is a linear scale. We can also have a look at this on a logarithmic scale, and we can estimate how quickly over the very long term does the US monetary base expand. When we measure this from 1959 to today, we come to 6.7% per annum. So that's also roughly the growth rate of the S&P 500 over time. So most of the gains that you're making with stocks, if you just buy the S&P 500, is simply just dilution of the monetary base. So those two trends are likely not going to stop anytime soon, right? People are going to continue to lose their Bitcoin, and the USA is going to continue to debase their currencies. So those are both forces that are pushing up Bitcoin over the very long term. Now, the main kicker though is adoption, right? Are we going to see continued adoption of Bitcoin? Now, there's, for example, the Bitcoin ETF, and we have seen quite a lot of Bitcoin getting scooped up at the beginning. This is now slowing down to a degree. Still, it's a net positive force on the price. In the last 5 months, we have seen roughly 0.4% of Bitcoin supply getting scooped up in that ETF, right? So I'm only looking now at those two data points after the initial hype phase. So that would then equate to roughly another 1.2% per annum just because of the ETF. Now, the nice thing about Bitcoin is that it's an open ledger. So we can actually have a look at how many wallets are buying Bitcoin. Is this number increasing over time? What is small retail doing? What is medium-sized retail doing? How do the flows of capital in general look like? So let's dissect those adoption metrics. It does not look like Bitcoin gets used more as a payment mechanism because the number of active addresses is pretty much constant since 2017. So in the last 7 years roughly. This is not growing, but the Bitcoin price during that time did go quite a bit, right? More than a 20x. And so the central thesis around Bitcoin is simply that it's a savings vehicle, right? It's not a transaction vehicle. It's simply just another way to store wealth besides stocks, besides property, besides potentially cash, which obviously erodes over time. In some ways, it competes against all of those asset classes. It obviously also competes against gold, right? Bitcoin can be now seen as the digital gold. Let's have a look at the number of addresses that have more than $1 million in Bitcoin. During the peak of 2017, that was roughly 30,000 addresses. During the peak of 2021, that more than 3x'd. Since then, we went sideways with the price, and the number of addresses with $1 million also pretty much went sideways. The reason why the chart looks somewhat erratic here is because this is a logarithmic chart. Here's the number of Bitcoin addresses with 100K. Now, this is very interesting because it shows us that there is more adoption when the wallet sizes are smaller. So it's really the average Joe that starts to dollar cost average into Bitcoin. The number of addresses in the peak of 2017 was 216,000. It then grew all the way to 500,000, so a 2.5x, and it is now close to all-time highs. It did continue to grow a bit more. That's different to the wallets with 1 million. Now let's have a look at the 10K. That tends to grow even more smoothly. And then at the 1K, we see how the number of addresses grew by roughly 50%, while the Bitcoin price just went sideways. Now, how is it possible that the number of retail investors is growing that quickly while the price is going stagnant? It's probably because some of the whales are offloading over time, right? If you have got a lot of Bitcoin and that Bitcoin grows very, very quickly and is now the vast majority of your wealth, you do want to potentially diversify away a little bit because, again, Bitcoin is very volatile. It can easily crash 80%, 70%. In a single bear market. If you still don't have that much money, then you're not really that worried about the volatility. Then you can simply just ride it out and buy low. But if you've already got 3, 4, 5 years of wealth and the majority of that is in Bitcoin and Bitcoin can drop by 50%, this might not be that pleasant. So the more wealth one has, the more people tend to be more risk averse and tend to diversify away across different asset classes, which I believe is a very rational thing to do. This needs to go to 1 million or March buyers now will make millions. This is how you get the clicks on YouTube, but this is not how you beat the market. To beat the market in crypto, you need to be better informed than the rest. You need to be better skilled than the rest. You need to do better blockchain analytics. You need to track other people's wallets and know what is the smart money doing. It's the boring educational content that forms skill that doesn't perform so well on YouTube though. That's why I created the premium membership. Feel free to check it out. We are tracking influencer wallets to find out what they are buying before promoting this on YouTube. We've got a lot of tutorials to help with on-chain analytics, to help with wallet discovery. And of course, there are also plenty of chats where we help each other and also one-on-one conversations with me. So I'm messaging every premium member one-on-one directly. Once you're joining, you will get a message from me and you have the opportunity to directly pick my brain. Feel free to check it out. thebitcointrader.com, link is down below. Now, instead of looking at the number of wallets based on US dollars, we can also just look at this based on the number of Bitcoin. So when we look at the very large wallets that have now $500,000 worth of Bitcoin, the number of those wallets did not really grow in the last 7 years. When we go one order of magnitude down to 1 Bitcoin, that growth tends to be a bit smoother. But again, at least in the last year, we did not necessarily see that much growth. So from August 2023 to today, the number of addresses with more than 1 Bitcoin is pretty much stagnant, but we have seen those kinds of stagnating periods in the past as well. Here's the number of wallets with 0.1 Bitcoin. So that's roughly now $6,000 at current prices. The growth is even smoother, again indicating that a lot of Bitcoin's future price appreciation will be retail driven. This is the cohort of investors with the most constant purchasing. So it looks like all of the trends are intact. There's continued adoption, especially by retail. There's more and more Bitcoin that gets lost. And of course, the US dollar over the decades continues to devalue. So it's very, very likely that Bitcoin will appreciate over the decades. Now, how quickly is pretty hard to guess. I do think that it will be faster than your average stock because of the shrinking supply and because of the continued adoption. The average stock again goes up by roughly 7% per annum. But are we going to outperform the very risky stocks, the technology stocks, very long term? It's not so clear. Let's have a look at a few long-term relative valuation charts. This is Bitcoin just in US dollars, and those are simply just two random curved lines. There's nothing mathematical about those curved lines. It's simply just connecting the bottoms and the tops relatively well. You've probably seen something like this on other channels as well. At some point, of course, this has to break because those two lines are getting closer to one another, but it's an interesting display of Bitcoin's long-term adoption. Now here's a different chart. There's a slight difference between those two charts. This is the US dollar valuation. This is Bitcoin relative to USM2. So we are dividing now by the US money supply. This is in the end what Bitcoin should protect against. And when we look at that, then actually a lot of the appreciation recently was due to money printing. So Bitcoin outperformed money printing by 2x over the last 7 years, but the Bitcoin price itself went up by 3x. So we can already say that at least in the last 7 years, half of Bitcoin's performance was the expansion of money supply. Now, to a degree, Bitcoin is competing with US technology stocks because it is also a risk-on asset. So what I think is interesting is how much is Bitcoin actually outperforming, say, the Nasdaq 100? Because if you look at the Nasdaq 100 relative to US M2, relative to money supply, it is outperforming. It's outperforming by roughly 7%. So we've got the monetary expansion of roughly 7% per annum. We've got the Nasdaq outperforming this by another 7 percentage points. So it returns on average 14% per annum. And what we've got over here is now Bitcoin divided by the Nasdaq 100. And this is a very interesting chart because here in the last 7 years, we did not see a lot of outperformance whatsoever. We simply just went sideways to a degree. It's hard to say how much outperformance there is, right? Because this could change on a dime. If we suddenly see a massive rally in Bitcoin, Bitcoin would still look like the long-term outperformer. If we see a crash though, then that's not necessarily the case. So that's a big question, right? How much has Bitcoin in adoption already matured? The way I interpret this data is that Bitcoin will at minimum perform as much as the Nasdaq 100, say, over the next 10 years. So at minimum, it will go up by roughly 14% per annum. I do think there is a high likelihood that it will outperform the Nasdaq. I also do think it's a very good idea to own both the Nasdaq 100 and Bitcoin. And again, the reason is that the correlation between those two assets is not very high. So this does go counterintuitive. Most people think that when stocks go up, that Bitcoin tends to go up as well and vice versa. I don't think that the connection is actually that strong. The numbers do not suggest this. It does make sense to own both in a portfolio and to overall reduce volatility by owning both Bitcoin and the Nasdaq 100. Let me show you. What we've got over here is the S&P 500. And what we see below this as the blue line, that's the correlation coefficient of the S&P 500 relative to the Nasdaq 100. So note how the correlation coefficient tends to be above 0. It's very often hovering between 0.6 and 0.9, somewhere around that line. That means that the two assets tend to move in the same direction on the same day. Now have a look at this. This is again the S&P 500, but this time the correlation coefficient to Bitcoin. And see how much more this is oscillating, right? This does go negative at times. When the correlation coefficient is negative, it means that the S&P 500 went up while Bitcoin went down, or vice versa. Bitcoin went up when the S&P 500 went down. And so you can't really diversify your stock investments by buying technology stocks and by buying the S&P 500. But you can diversify your stock investments by owning Bitcoin as well. And so if our expectation is that Bitcoin will at least return what the Nasdaq 100 returns, and at the same time we believe that the correlation coefficient will be relatively low, I think we've got a very nice thesis to have this heavily in our portfolio. If you currently have, say, 20-30% in technology, it might make sense to have the exact same allocation to raw Bitcoin as well. I don't think Bitcoin should just be sprinkled into a portfolio with 2, 3, 4, 5%. If you feel comfortable owning Alphabet stock or Nvidia stock or Microsoft stock or Amazon stock or Netflix, then you should also be okay dollar cost averaging into Bitcoin. If you got something out of this video, feel free to give this a like. It helps the channel grow. Feel free to obviously also share this with your friends. A subscription would be very much appreciated as well. I publish videos regularly on this channel. In case you use Telegram, then you're more than welcome to join us. The link is down below. It's 100% free. Looking very much forward to chatting with you. Cheers.